they will never let this index go down for a considerable amount of time. Thursday, February 1st, 2024, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at the only thing that you really need to know about the Federal Reserve. And of course, yesterday we had the FOMC announcement. We had Jay Powell's press conference as well. So that's what we'll focus on today. Before we move on to that topic, just wanted to talk about something that I think is really important in these turbulent times, in these times where the rule of law seems to be breaking down, not just in the US, but in the UK as well. We've got our borders being invaded basically by illegal immigrants or aliens. We've got the police more concerned about people on social media than petty crime or more interested in burglary and assaults. So it's with that in mind that I've partnered with the Dirty Man Safe. And yes, you can see here, it's a simple and easy way to protect your valuables, the Dirty Man's Safe. And we've got some testimonials here, of course. Howard, Monaco 64, and Rafi Faber, thank you. I have one word, perfect. The other one here, excellent product, well constructed. Looking forward to putting it to use shortly for safe storage of bullion. Thank you. Great safe, great service. Thanks you all. Joseph M. This was Elizabeth M. This was Dan K, of course. Very satisfied. Have already recommended Dirty Men Safe to several friends. Well done, Dirty Men Safe. So, yeah, if you go onto their website, you can play the video and look at how it works. And the other thing as well, if you use my promo code Monaco10, you get 10% off. And all the details, of course, are below in the description. So uh, back to the Federal Reserve. And I'd like to add as well, if you're new to the channel or if you've been watching the channel for a while now, make sure you subscribe to the channel. Make sure you hit that little notification bell to be notified of all my new videos. So I did listen to Jay Powell's press conference yesterday, just for fun, but also to see how the reporters there really throwing just softball questions, so to speak. No hard balls, no fastballs, excuse me. Yeah, no fastballs, no difficult questions. I didn't hear any of them ask about um, the fact that the debt spiraling out of control. The U.S. Treasury is running 2 trillion plus deficits. That credit card debt is up to here. No, all you hear is Jay Powell spouting out all the fake statistics that we get from the government, saying that the economy is really strong, the unemployment has been the lowest in 50 years, even though they don't count millions of people that have given up, of course. They don't, he didn't say anything about the fact that you've got a record amount of people that have more than one job because they can't cope with the rising cost of living and the debasement of the currency, which the Federal Reserve is, well, it's not really supposed to maintain a sound currency. He keeps reiterating, of course, that the Fed's goal that was given to them by Congress is to maintain price stability and full employment. He doesn't really care about the currency. And I would say the currency is the most important thing in an economy for the general public, because if your currency keeps getting trashed, your standard of living is going to keep going down. Of course, for the people like Jay Powell in the top 1%, they're able to um, to fight the effects of currency debasement. The wealthy can always do it much easier because they have more assets. They have access to the Fed's easy, or not easy, but funny money. It's like Cantillon said, the people at the top are always first to get the funny, easy money, the fake money. And by the time it gets to you, it's worth a lot less. So, yeah, I watched it, so you didn't have to watch it. But I wanted to show you a picture that I did a screenshot while I was watching the press conference. And you can do it on YouTube. The Federal Reserve does have a YouTube page, and it was on the live function on YouTube. I just thought this was interesting. This reporter here, she had two masks, and here we are in 2024, and she's still concerned about you know what. So it just goes to show the kind of people they have there. They're not gonna ask tough questions. They're not going to ask Jay Powell about what happened to this bank yesterday, the Bank of New York Community, New York Community Bank Corp. It fell like 40% yesterday. And this is one of the banks here that acquired Signature Bank in March of 2023. So no mention of the fact that the banking sector is under pressure again. Not even in the the release that they had prior to the press conference. And it's interesting, does that matter that they talk about the banking sector? Well, it seems to matter to Danielle DiMartino Booth, who worked for the Dallas Fed. She says, well, she said yesterday, I was surprised that they completely removed any language about a sound banking system on a day like today. They also took out any language about tighter financial conditions impairing growth, which nods to record high stock prices. So it seems like the uh, the market and investors want rate cuts as soon as March, and they want like six. But Jay Powell said probably not. We're not going to be as aggressive in terms of rate cutting. And you have to wonder, why do they have to cut rates? If you've got a great economy growing at 3% or so, you've got inflation coming down, and that's something we're going to talk about in a minute, inflation or the CPI. Unemployment is low. The stock market is at all-time highs. If anything, they need to keep policy at the minimum tight as it is, or even talk about increasing interest rates. And that's why I think hard assets are the place to be, gold and silver especially, because they don't want to bring the cost of living down. They will never do that. And they keep saying, of course, oh, we're here to help the general public by maintaining price stability and full employment. But what the Fed is here really to do, or central banks in general, is to make sure that Wall Street and the big banks and big corporations, can keep going and can keep leveraging and abusing this power to create reserves out of thin air. One of the questions or responses that Jay Powell gave that I think points to the fact that the Fed will never help the general public. The Fed will continue to trash the currency. Is this answer here to a question from someone actually from Agence France Presse, the French press company, to do with consumer confidence. And this is how Jay Powell answered it. So I'm going to play it to you.
Thank you. Yeah, so it's been interesting that confidence surveys have been weak at a time when unemployment has been low, very low, historically low for a couple of years. But nonetheless, that's been the case. And we've asked ourselves why that is. And one obvious answer: we don't pretend to have perfect wisdom on this, but one obvious answer is that the price level is high. So prices went up much more than 2% per year for a couple of years, and people are going to the store and they're paying much more for the basics of life than they were 2 years ago, 3 years ago, and they're not happy about it. And it's fine that inflation's coming down, but the prices they're paying are still high. So that is what that has to be some part of why people are unhappy, and they're right to be unhappy. This is why we need to keep price stability. It's why we need to do our jobs, is so that people don't have to deal with things like this. In terms of you're right.
I'll stop here. So he said, yeah, consumer confidence has gone down because people are hard up. The price level is going up and they can't go and buy as much. They're not as confident, and they're not confident that the Fed can keep inflation from rising or prices from rising. And he says, well, we have to maintain price stability. And he said that, yeah, prices have risen by more than 2% in the last 2 years. But my question is, if the price level here, and I'm taking here the consumer price index for all urban consumers, if it keeps going up, Jay Powell, uh, why have this 2% CPI target? It seems crazy to me. To me, it seems like that CPI should go negative, so that this price index comes down and goes back to well, I don't know. You could go back to the 50s and 60s. So why can't they do that? And this is the only thing you need to know about the Fed. They will never let this index go down for a considerable amount of time. And that's because the United States and all countries in the world for many, many decades now, especially since 1971, when Nixon took the dollar off a gold backing, has been under a fiat currency debt-based system. So what that means is that whenever governments issue debt, that debt backs the currency. Unfortunately, though, that debt has a coupon or an interest that the government or corporations need to pay. So whenever they issue the debt, there's never enough currency out there to pay off the debt. So they have to keep issuing more. And to allow prices to come down, that would be a reflection of deflating the debt, letting the debt go down. But we've become so addicted to debt that they can't do that. And that's why the currency keeps getting debased. Yes, that's why the dollar's lost like almost 100% of its value since the Fed Reserve Act was passed on December 23rd, 1913. So I would say that's all you need to know about the Fed, really. They're going to keep doing that. And who benefits from this? Well, Wall Street, the big corporations, the very wealthy who have the wherewithal to protect against this inflation. And they're also not too bothered about food and energy and transportation going up because it's a small proportion of their income and their wealth. So yes, I made another tweet about this, and I'll show it to you. So here you go. The only time uh, we see this come down is during, the '08 crisis, the 2020 crisis, and that's why they come in and start printing. They start the printing presses, or Jay Powell goes brr, so to speak, because they can't have prices going down, consumer prices, or what they call inflation. Inflation, of course, is the creation of currency and credit and debt out of thin air. But yeah, this is what I tweeted here, and I wanted to show you this as well. Um, that goes to the heart of the problem of this 2% target. I said, who has given the Federal Reserve the authority to debase the currency and tax the public by 2% per annum, right? This creates a hidden piggy bank for Wall Street bankers on the back of the American public. So, yeah, it creates like an emergency fund. That's all it does. all this liquidity that debases the currency. So that's what I would say is all you need to know about the Federal Reserve. Yes, go and watch the press conference the next time the Fed has its FOMC meeting in about 6 weeks. It's a little bit of fun and games, and it would be interesting if the Federal Reserve, the FOMC, invited Tucker Carlson to ask some tough questions, but I don't think they will. Or if someone yesterday afternoon in DC, one of the reporters had asked about the New York Community Bank Corp dropping 40%. I wonder if that person would be back at the next FOMC. So there you go. The Federal Reserve is a communist, uh, fascist because it's the melding of government and corporations institution. That's all it is. And it's 12 or more people, bureaucrats, deciding where a monetary policy should be for not just 330 million Americans, but for the rest of the world. It's crazy. Uh, Someone should send Jay Powell and the people at the Fed a memo saying that the free market is the best way to determine the price of credit, not you guys. So, with that, let's quickly look at where the markets are this morning. It's 8:24 a.m. London time. Let me bring up my system here. So we're going to start as usual with gold. Gold, yeah, in the last this week and the week before, it's been fairly strong. It's been making new recent highs, but at the same time correcting late in the day and then coming back. Uh, I think it shows there is a pretty good support. And whenever we get these sell-offs during the day that seem to happen at the same time, we see people coming back and buying it. So it looks pretty good. You can see here is just up slightly around 2041. High's been just below 2050. I think yesterday, prior to the FOMC announcement and press conference, we got to 2058. This is the spot price, of course. Right now, the front month silver futures price is April, and it's trading quite a lot higher than here. I would just focus on the spot price, but it doesn't matter. Silver, unfortunately, has been a little bit under pressure. We made new lows here overnight, 22.71. It got hit hard during the press conference yesterday. It's down 15 cents. What about the stock market? Well, the Dow futures is up 59, NASDAQ is up 114, S&P is up 18. So this is what the Fed is more concerned about, keeping the stock market inflated so that the big corporations and the big banks can keep operating, so that their friends can keep enriching themselves while the general public gets, yeah, gets robbed, really. That's all it's about. Am I against people doing well and having wealth? No. I'm against having a an institution like the Fed that gets government power and favors private interests. We shouldn't have that. That's what I'm against. It's not a free market institution. Anyway, what about the currencies? Yeah, the currencies are coming off here, as you can see. Sterling is down, or cable is down 0.25% or so, 126.50. The euro, likewise, 107.86. Dollar's down a little bit versus the yen, 146.63. Dollar's fairly strong here against the yuan, almost back up to 720. What about the Swiss franc? Yeah, the dollar's still fairly strong. We're up about 5% this year, or since the end of last year versus the Swiss franc. Let's go to the other currencies. We got Aussie dollar down 2/3%, 65.24. I think the Aussie dollar is almost at an all-time high. It's the gold price in Aussie dollars, that is. We've got the Canadian dollar, while the US dollar is up slightly versus the Canadian 134.54. And the Kiwi dollar is down a third, just below 61. So let's check the commodities now. We've got WTI crude at 75.50 is down about a third. Brent is also down about a third, just above 80. So crude oil has come off in the last few days. I think we got up to almost 85 in Brent uh, a few days ago. High-grade copper is down just over 1% at 387.68. So, with that, I'm going to wish you all a very good day. Take care. Bye.